Hey guys, this is Matt, and let's do another portfolio video. Alright, so I'm going to try a little bit of a different format with this. It's going to be a little unscripted, which is fantastic for a guy with a stutter, but we'll see how it goes. It'll be great. So what we're going to do, we're going to hit the portfolio, as always, and then I'm going to go over a different investing strategy that I'm going to implement, and we're going to see how that goes. And then we're going to go into a little decision I have to make a little later on. So anyways, without further ado, let's hit the portfolio. Oh, also subscribe. Okay, so as you can see, we are doing better than last week. The market's going up a little bit, and then you can see my portfolio has increased quite well since last week, and we'll talk about that in a second. But anyways, let's go over the positions, and then we will talk some strategy, shall we? So right now we got Bank of America. As we're gonna do the total gains and losses. So Bank of America still down 21.12%. Cloudera up 21.5%. Cisco down 12.03. Facebook down 8.31. Pfizer up 0.48%. Qualcomm down 14.57%. Revolve 41.23. Revolve down 41.23%. Sony down 16.35%. And Uber, we are actually up 2.28%. So total portfolio down 11%. We get $8,657.22 as the portfolio. Now let's talk strategy a little bit. So I was going over some stuff. I've been talking to a money coach and trying to figure out what my strategy is for the future. Now as far as this Fidelity portfolio, as you can see, I have a mix of growth and dividend stocks, right? I am planning on doing this. So as far as my growth stocks, like Facebook and Uber and stocks that I plan to invest with the intention of them appreciating over time, I think I'm good on their positions unless they drop lower. So right now, I'm gonna focus on dividend stocks. Now, I am not a dividend investor. That's not what I'm going to be 100%. But I do want to consider dividends a part of my portfolio. And I figured now's a great time now that the we're still. I don't know if we're still in a bear market. I don't know what you want to consider this, but we're still. The Dow is still well below its high. It's all-time high, right? So while the market's still down, I'm going to do this. So every month, I am going to invest $1,000 into my money market in Fidelity, and from that $100, what I'm going to do is I'm going to take $200 out of that, and I am going to deposit that $200 into a dividend stock. Now, if you use the mobile app, the mobile Fidelity app, you get to, instead of buying shares, you can buy dollars, which means that the last share will be a fractional share, right? I'm going to do that on a dividend stock every week. Now, what I thought I was going to do in the beginning is every week I was going to hit each dividend stock one time. So 1 week I do Bank of America, 1 week I do Cisco, 1 week Pfizer, one Qualcomm, and then back to the top, right? And I would do that over and over and over again. And that was going to be my strategy. Now I was talking with my money coach, because I go through one of those. It doesn't hurt to get a little help, right? So I am going to start out with this way. So I am going to take the position that is the closest under 52-week low, and I'm going to dump $200 into that stock. I'm going to keep that up. Now, if it ends up being like week after week, I do the same thing to one stock, I'm going to change it up a little bit and do the next lowest stock. So we're going to do that for the foreseeable future. Now there's one thing, if you've been watching my last portfolio, you may see something missing. I got rid of my Nordstrom stock, my Nordstrom position. If you want to get my full take as to why I dumped Nordstrom, you can check out my video up here. Okay, so, alright, so let's get to the unscripted part. This part I have no idea how this is gonna go, but let's see if this is fun or not. When I shot my last video, towards the end, I talked about, you know, a stock that I was going to pick, and I was going to talk about it in not this video, but the video I'm going to do next week, right? And up until this morning, that stock was going to be T Rowe. I mean, just full disclosure, that's what it was going to be. That was my plan all the way until this morning. So I watched a video of a YouTuber I like. His name is D-Litz TV. I really like the guy. He went over his dividend investments and all that stuff, and he was talking about a company called Realty Income, right? And he used the term the monthly dividend company, right? I think that's what he used. And I said, wow, those are pretty bold words to describe a company. And you know what? I decided to look into it. So, I will probably make a lot of cuts if this part takes long or if it takes me too long to look up stuff, but we'll see what happens. So, I decided to look into Realty Income. So, just to explain, T Rowe is an investment company. Basically, they operate on mutual funds and retirement investments and stuff. Basically, people give them money, and T Rowe invests the money, T Rowe makes money, and then you make money. Realty Income, that's a REIT, so they act as tenants and stuff. They acquire, various real estate. I think some of their customers include Walgreens, AMC, Kroger, stuff like that. It's really crazy. The moment you get to their website, the very first thing it says is the logo, the monthly dividend company. So, okay, fair enough. I guess that explains it, right? And so this is like a REIT. I think that's how you pronounce it. That's dedicated to providing dividends. That's what they do. That's how they distribute their profit based on real estate. So shit. I only want to pick one position to replace the. I only want to pick one position to replace Nordstrom, right? I don't want to pick two. Like the way I want to do my investment strategy is I want to have 10 stocks, and those 10 stocks are my ride or die. So we have some decisions to make here. So let's look through this. I mentioned in my last video that I really wanted to avoid companies with lots of debt, right? With lots of debt. T Rowe, one thing I liked about T Rowe is if you go to the balance sheet, T Rowe does not have any debt whatsoever, which makes him a pretty solid dividend play. If you go to the payout ratio, incredibly low. Go to the dividend yield, the percentage. That doesn't really matter that much as long as it keeps going up over time. Let's take a look at the dividends for T Rowe over the past 5 years. And they've been going up. And not only have they been going up, they've been going up consistently, right? Now, I looked into Realty Income some more, and apparently all the popular dividend YouTubers talk about Realty Income. So, Realty is apparently very, very popular. Okay, so T Rowe has been increasing their dividend yield for 34 years, which is pretty outstanding. Realty Income has been increasing their dividend for 26 years. So they've all got some I haven't checked to see if both of these are aristocrats, but I mean, they've been in the game a while, and I mean, realty, since I mean they're real estate, that means they've been increasing their dividends during the financial crisis of 2008, which was, you know, based on real estate, right? So that's pretty good. So, but they pay 23 cents monthly, so 69. So every 3 months, so 69 cents quarterly. I don't know. I mean, I'm kind of liking T Rowe. I know realty's a popular one to go with, but I don't see anything wrong with T Rowe at all. Like, man, I mean, one thing I really don't like about the realty income. Now, I know this is part of what a REIT does, is, you know, they're meant to have large amounts of debt, and they're meant to, and as a rule, they have to give out most of their income as dividends. So that's why their payout ratio is so damn high, right? But I mean, this company has debt, right? But it's probably had has debt for a long time. Now I did learn about the what is it, to debt to equity rate ratio. I did that, and I think it has one of 86% debt to ratio, so that's really good. And they have a lot more assets and liabilities, so I'm pretty sure both of these are quality companies. But which one do I want to pick? I don't know. I guess that's for me to decide. So anyways, I just wanted to show you guys that you know, what I'm looking for, what I'm looking for in a dividend company. I do have both their 10Ks. I read through this. I'm not going to go through this during the video. That's way too long, right? Ladies. But anyways, yeah, so I'm gonna stop this video here. Thank you guys for watching. If you like this content, please subscribe. I will let you know in next week's video which position I'm gonna pick as my final ride or die. We'll see how it goes. But anyways, have a great day and eat your vegetables.